Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Dun dun dun. Happy New Year and all that. Hope you had yourself a good Christmas break. And welcome to 2020. Actually, really cool. We're just about to get the dashboard up and running. Sjord delivered on time his promise for our screening engine to be up and running for January 1st, so super stoked about that. And now all of us at TRI have a massive learning curve to go through how to build all these screeners now. But nonetheless, TRI is embracing to the developer cycle and building out further tools to hopefully help you all in your trading experiences. So as always with this free video, I like to sort of keep it relatively simple, just a few markets that we look at on a consistent basis to get an idea of what sort of the temperament of the market is. And then also talk a little bit about various different stock ideas and altcoin crypto ideas that we've got kicking around. And, like I said, I never really want to recommend to you what you do with your money. This should just be all educational purposes. But, full disclosure, and I'm more than happy to provide the statements if somebody wants to hold me to task. I do take the trades that I tout. And actually, I'm feeling pretty good about one this morning. Woo, 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 woo. But we'll get to that in a bit. All right, so first things first, US dollar index. We've talked at length recently about the massive trading range gaps to the upside at 99 and change, gaps to the downside 96 and change. And we're just playing ping pong in between these two ranges. We also have talked recently about AB equals CDs take us down into the bottom end of the range. And I wonder if that's sort of what has happened here through the end of the year. It's interesting to see the US dollar index itself is enjoying a bit of a rally here this morning. But as you can see, she got really beat up here recently. So much so that actually I'm seeing things like double bottoms on things like the euro, which I was touting about over the weekend. Interesting breakouts on things like the Canadian dollar, the Australian dollar. So I think what's happened here, and this of course is just opinion, but it feels like the Fed was sort of, all through 2019, especially the first half, was like, okay, we're going to sort of rein things in. We think the credit cycle has gone too far. We want to slow things down a bit. Politicians came in and threw wrenches into the works, and things really slowed down appreciably. So much so that I think it became actually like a political football, which the Fed really never wants to be. They don't want to be perceived as part of the political process. So I think that they were encouraged to back away. In essence, they have backed away. They say it takes about 6 months for Fed policy to kick in. I get the distinct impression that those stimuluses are kicking in and growth is starting to come back around the world. On top of that, we have catalysts that are sort of suggesting that things like trade deals are going to be ratified, and that will take the rhetoric, I'm going to slap a new tariff on you, I'm going to hit you with this tariff, all off the table, because the people are at will, right, are going to be like, hey, we've got this trade agreement. So, especially with regard to NAFTA, that's coming to a head here within the next few weeks. But also, too, obviously the big political football is China, and we're supposed to be having some sort of trade deal solidified. And what's really interesting through the daily brief today is we on Thursdays we have the baby powder report from Julian, and it's really interesting to see how things like the Thai baht are setting themselves up into that catalyst event. You can, whether it be from a seasonal perspective or whether it be from this trade deal perspective, you can literally see the market setting up. So I'm left to wonder, what happens on the other side of that catalyst. And it feels like everything's growthy, 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 optimism, optimism, optimism into that catalyst. And then we're going to have to see what the heck everything looks like on the other side. Having said that, I still think US dollar is range bound, testing the bottom end of ranges. All the international currencies testing the top end of the ranges. And I'm feeling like, probably into that catalyst event, that is going to be that sort of cycle pivot. And then maybe once that's done and priced in, then we have to see where the dust falls after. With regard to risk on, risk off, like I sort of said, and in a weird sort of way, it does kind of make sense that if the Fed sort of put back in the box, we're going to let, lending get out of control again. We're starting to see things like Japanese yen put in bottoms and start to rally. Of course, Fed put back in the box, lending can get out of control. That's obviously inflationary. So at a certain degree, I think it can explain a lot of the gold rally recently. Very interesting. Now, on a more sort of like longer term 70-year interest rate cycle, I'm very bearish of bonds at this point in the cycle. This is not a good time to be an investor in bonds. I've got a trade that still seems to be working away, looking for this 50% level to be tagged. And it's just interesting to see, like stock market, we've got January barometer. Bonds jumped out of the gate first thing this morning, but they're starting to erode those gains. And I'm also wondering, I look at the gold sector and I'm getting a little worried that, I'm hearing a lot of people talking rah, rah, rah gold, but it's interesting when you actually look at the gold stocks themselves, they're not moving to new highs right out of the gate here this morning. So I'm a little bit, I do think that there is January barometer position squaring kind of idea starting the year. So we have to give the market a little bit of room to sort of breathe and give us direction. I'm a little bit concerned about people like gold, for example, strapping on new longs up here. This to me seems very dangerous. And our currencies, you can see this swing in the yen. Does it really make sense to get all bullish of yen up here? I don't know. And then, lastly, I don't like bonds, and I think bonds are extremely dangerous right now. And they haven't enjoyed any rally here. I mean, they gapped higher, but they basically, into that rally this morning, all it's seen is selling. Very mixed message, but my take is think of January barometer position squaring starting the new year. It's interesting when we were looking at oil stocks this morning, our risk on, risk off perspective, of course, is a bit of a mixed bag. There's the gold right up against the top end of the range. There's the yen just rocking and rolling. If anything, we were looking for that validation, so okay, that's fine. Interesting how the bonds are trying to double bottom here. But I'm going to be watching really closely the stock market through the first week, first month, because January barometer, we really want to be watching the stocks closely here. And to that end, through daily briefs and stuff, I've got my January barometer reports going. So I'm going to be watching how the market feels. And usually what ends up happening is the tone that's set in January often expresses itself through the rest of the year. It's interesting how the stock market did jump violently right out of the gate on the open, but in essence has met basically selling pressure from the get-go here. So this has left me a little bit confused too, in that you could make the argument right out of the gate, small pop up, but as this sort of first trading day goes, I'll follow first trading day, first trading week, first trading month. It looks to me like we're going to be running into a bit of selling, whatever that sort of first push is. Then consolidation, and that would make sense. Little, test of both ends of the range, probably through election. My hunch is that through the end of the day they ramp it up, but let's see what happens. Maybe they ramp it down through the end of the day, meaning it's going to be a horrible end to the year. Who knows? But so far, first trading day, of the new year. The data is big uppy on the open, but a lot of sideways following the open. More sort of mixed messages. So I'm not really going to read too much into risk on, risk off until we sort of get through maybe like the first week. And then also to remember, this is the first 2 weeks of the new quarter. So we're also going to have to watch how portfolio managers are rebalancing themselves and their sort of anticipation of where we are on the economic cycle from a sector rotation perspective. So lots and lots of moving parts here right at the beginning of January. Be careful, everybody. Don't place too big of bets for now. It's interesting moving on into the stock market. I do think there were some fantastic trade ideas that set themselves up into the end of the year, tax loss selling, restructuring of companies. And I got handed a real treat this morning where one of our stocks jumped up 50% right on the open and just looks stunningly strong. Don't chase it. You know where to work bids. I've got more bids working down in the 15-cent area if you are interested in that telegenomics. But this is also very similar to another one that I was touting recently that actually violently popped yesterday and then has worked its way right back down to the bottom end of the range. And actually, I got filled on a couple more bids here this morning on this one. So let's see if this thing loads up. Here we go. So, this is the kind of crazy market that we're in here. Stocks jump up, don't chase. But I had said in recent videos I was happy to buy the breakout if it came. And I also really want to get some off the original bottom. And you can see I had an order here at the gap. After this happened, I got filled on that this morning. And I got another order down in here. So, this is the kind of stock market environment that we're in. Get ready, guys. I mean, it's going to be a wild 2020. And so, as you can see, this telegenomics, I mean, oh boy, those W's. I tell you, man, this stuff, it's powerful. And, just wanted to give you an idea of, these are past tense. You can't buy that now. Work your bids at the bottom like I showed you with that other one. But, here's one that's just getting going right now. And it's in the pod sector. And you tell me, would it make sense why a guy like Beamish would be interested in this kind of name? I mean, hopefully you can see the W's. And, has it got some room to run up? So, not only am I going to toot my own horn, whatever, on winners. Way to go, Brian. You're awesome. But I'm also, I like to show you guys, this is stuff I actually came in on the buy side right here, So, and I'm long calls, bunch of leaps, 2021 call options. I'm buying myself a world of time here. So, a couple ideas. Remember, I'm not going to tell you what to buy. I'm not going to recommend to you what to buy. I'm just going to tell you what I'm doing with my money. And if I'm a half-decent money manager, well, trade ideas speak for themselves. All right, so let's head on over to corn. And the interesting thing is, even in crypto, it's the same stuff. Nothing's really different. You look at the corn itself, and, it's interesting. I try to keep these same chart decks on here so you guys see a somewhat consistent message from me. But I do remember the other day we painted this AB equals CD, and we said, oh, boy, looks like a fractal's coming here. And so at the bare minimum, we probably ought to be thinking down into reload zones. And sure enough, look what happened this morning. Doink. So, tough to say if this is the bottom. What I think's happened here, and you can see, I mean, maybe we can crisp this up a little bit, get the exact numbers here for you. You can see 69.10.93 here, and this happens to be on Coinbase. This morning's low. 69.03 even. So, good old Mountain Man, and this is the crazy thing about really good pit traders is you just know he's long. How much of a move does this translate into? Does he make money on the trade? Who knows? But it's just a great analogy of a pit trader that I used to work with. That he would buy every single damn Mountain Man level tagged forever. And, in an ironic sort of sense, the guy's actually up on the trade, right? Let's see. He bought right there. And what do you think? Was that a half-decent fill? It's ridiculous when you see this stuff after a while. It drives you nuts, right? So, I mean, if you're not going to join TRI site, which I hope you would, watch these videos and learn this. 61.8s are ridiculous levels. Anyway, does this inside bar and we work our way back up? It could very easily happen. I do like the idea. I'm a big fan of harmonics, and that's basically what this is, A, B, C, D. So I just crisped that up. So let's go see where that aligns. If we go there and there, well, awfully close on that AB equals CD level. Could we see a little bit more play around here to hit that AB equals CD? Sure. I mean, it's not out of the question. I guess the point that I would just simply make is, and this is probably a really good lesson for all of us if we're thinking like look left. Where was the last time we saw key support? And on this price action here, you can see there was a little bit of a traffic area right in here. Some people were selling. I think it's going down. I think oh, Jesus H. Christ, look at what it just did. So there are some trap bears in here that would just love absolutely nothing more than just to get released from that level, which means that the supply and demand dynamic of the marketplace could change all in and around this area. So let's go see where price action is. Okay, so the low end of that range, actually this is kind of cool, right? Because you can see the top end of that range, the bottom end of that range, this is like a battle zone. And so you can see we dipped in, we tagged the top end of that range, and it's almost like, 61.8 top end level. I would imagine even some people seeing this breakout said, okay, fine, I'll just place my buy order a tick above that high. So we dump into that level and boom, they get filled there. Mountain Man, of course, top of reload zones, AB equals CDs. I can understand why there's a bit of a fight here. What scares me, though, is that if you actually look at this, really, where is the bottom? And it's all the way down here. Remember, that was a V bottom low, right? I often like to talk to you guys about candle body levels for trade location. I think that's basically what this dotted line is off that daily chart. So you can't really call bull, and you can't really hunt long setups until we see a little bit more anecdotal information. I think what we're getting right now is, it looks to me like we have potential location, right? We are at or below reload zones. All right, now what we want to do is we want to see signs of divergence in our momentum indicators, right? So let's maybe head back down on those lower time frames. Do we have signs of divergence? And the answer, unfortunately, here is not out of volume. That was a big sell bar. And not out of price momentum. That was a new low in MACD, so no signs of divergence yet. So I think you just got to cool your jets. And then, of course, once the divergence comes in, then we can start hunting price structure, candlestick patterns, W's, heads and shoulders, all that kind of stuff to hunt a trade. So if anything, what I'm seeing right now is, the crazy-ass pit trader gunslinger, guys like Mountain Man who can really manage their emotions on the short term and watch price action closely. I think they're probably taking stabs in here. But, for probably 99% of this world, it's still a little bit early for us to be like actually going, hey, there's a W to work with, right? Old-timer fogies like me, I like to see the W's come in to make me feel like, okay, at least we've got some lows to work with and looking for that long. So, and of course, at the same time, too, before we actually start seeing that, there's this big problem here. What are we supposed to think if we ever see the market smiling at you? That's not a good sign. So, you could also argue too, Brian, isn't that a big honking head and shoulders pattern that just confirmed there? Yep. So we've done some technical damage here, and our basic message out of the daily brief, baby powder report was, look, we've done some technical damage. Yes, we are coming into some interesting levels off the lower time frames, but we got to cool our jets and let this thing develop if we're actually thinking about hunting longs. And interestingly enough, because of the head and shoulders, we even did talk about counter trend rallies against necklines here. We might actually even think about strapping on short hedges because we do actually have structure here to suggest that the bear is back in control. Okay, so there's your Bitcoin summary. Wonderful. I noticed that a lot of the altcoins that were potentially setting up W's, things like Ethereum, have kind of just stalled here. You can see the narrow sideways channel. My suggestion, again, not recommendation, but what would I be doing here? Why don't we just let this channel resolve itself? Let the W come in, trade the W. Until that happens, there's nothing here. You just got to cool your jets. Put a nice price alert on a breakout above that high. That's 140.02, so maybe 140.05 or something. And if this thing does W out, great. We got that trade idea working our way up to the 50% rule. But it hasn't come in yet. But the interesting thing is, and this is a coin that I was touting recently, and what's funny is I don't pound the table very often. And actually, we used to have a site member, Da Vinci. He used to say, that Beamish guy, he never pounds the table. And so if you ever see me actually put a tweet out that says something along the lines of, where the hell was it? Don't pound the table often, but if I was a table pounder, my table might just be considered pounded. And that was looking at this damn Geo. Look at that beautiful W. Oh my God, look at this divergence. And of course, and this always seems to happen, but the ones that you want to buy, they just take off and they don't look back. Jerks. Anyway, still got my bid down in here. I'd be more than happy to add. I've already got a whack of this on the books. Remember, I own almost every altcoin out there. But I wanted to add a bit to this, and it looks like I missed the boat. Boo! So it just goes to show that there are ideas that are working. You don't have to be just wrapped up in Bitcoin or even the big ones like Ethereum that are still waiting to turn. There are actual little trade ideas out there perking up every day of the week. Okay, so I think I'll leave the summary at that. So I hope you enjoyed the offering. Hopefully I've given you some ideas to chew on. Try to play from a position of strength. We do, of course, have a new school term coming up. If you want to get your act together and start building a trading plan and really understanding what that idea of trading setups looks like, have a really good education into the different type of risk takers there are in the world. And then, of course, how do we become rational analysts? This idea of combining fundamental and technical analysis to come up with trade ideas. I think our school program does just an absolutely awesome job at taking people from absolutely knowing nothing to actually building and running a small business of trading. And our term coming up here starting in January starts in the next week or two. So by all means, if you have any questions, feel free to ask. We're here to help. And as always, PMA for the win. Thank you so much, Kevin, for your assistance delivering this product on a regular, consistent basis for everybody out there in YouTube land. And of course, thank you so much for your participation and interest in what we offer. All right, everybody, have yourselves a great day. All the best, and bye for now.